Welcome back to the Free from Wall Street podcast. My name is Stephen Libben. I am your host. And today we're going to be talking about 5 reasons you're going to love investing in real estate syndications. So if you've been listening to the podcast, you know we talk about this quite often. We started in the single family space, and then we started looking at the active income we were creating. And we were recognizing, wow, every transaction that we do, we have to go out and find another deal. You only get paid once on these deals. I really want to get into this passive income game. So 10 years we spent in single family fix and flip and doing some wholesale deals and things like that. So we started looking at how do we get into some passive income? Maybe we'll buy a duplex. Maybe we'll buy a triplex, right? Maybe we will get involved into single family rentals. So regardless of whether you've been in small multifamily deals or single family deals, it takes a lot of work, right? And look, we're not against work. I'm happy to get my hands dirty on things, and we're excited about the work that we get to do. But that's not passive investing, right? You build yourself a job. You're always doing things like finding properties, negotiating and funding the deal, renovating the property. You're interviewing tenants. And if you're managing this stuff yourself, forget it. You're changing toilets. You're doing calls from the tenants when they have a problem. Even if you have a third party manager, right? If it's a small deal, but you have a couple of them, let's say, and you have a third party manager, that stuff really still kicks back to you as the owner. And it just doesn't stop there. You have to do this process over and over and over again. And now I'm back to square one, where I wanted to stop doing active stuff and going into more passive investing. And, it's real easy to build yourself a job in this business. And, that's not what we were looking to do. So why investing in multifamily rentals can be a lot of work is for some of the reasons that we just talked about. But if you own a single family house, this is what we started thinking. This is our thought process. If I buy a single family house, right, and the tenant moves out and it takes 45 days to get a tenant, who's paying the mortgage? This guy. So why would I want to do that, right? It's not even going to cover the mortgage. So maybe we do a duplex, right? If one person moves out, then maybe it doesn't all fall on me. At least we still have some passive income over here. It's so much easier to manage a larger scale property, right? It's one roof instead of many roofs, where one tenant moves out and it doesn't really affect the cash flow that much. So if you're being a property manager, you're doing the rentals, you're doing the bookkeeping, you're making the strategic decisions. Maintenance and repairs are your responsibility. You're running a small business. So if you're looking to be a passive investor, and let's say you even have a full-time job somewhere, you're going to be running a business outside of your job. So you're creating more active work for yourself. So on the flip side of that is the passive investor, right? Fully passive. I didn't even know that this stuff existed when we started in the real estate business. I thought I had to get involved in a real estate investment trust or invest through Wall Street to really be hands off and just watch my money grow. That's not true. There are fully professionally managed and operated investments out there that are available to us, available to you, where you don't have to deal with the tenants, the toilets, the termites, any of the nonsense, as I like to call it. Once investors begin to understand that passive real estate investments are out there, then we start to move towards syndication. Okay. And here's why. Number one, minimal time required. You've heard the infomercial, set it and forget it. In a syndication deal, you're going to do the vetting up front. You're vetting the operator, you're vetting the deal, you're looking through the pro forma and the numbers. And then you're choosing the sponsorship team who's going to actually be running that stuff, the day-to-day operations. And then that's it. After you've made the decision to put money in, you really do just sit back. You're a limited partner, meaning your responsibilities are limited, your liability is limited, all of those things. You're not fixing toilets. You're not screening tenants. You're not handling maintenance, right? We do that. The sponsor team does that. The property management team does that. And guess what? We're professionals at it. That's all we do. So we kind of know how to do that stuff. Number two, opportunity for diversification. I knew when I got into real estate that I didn't know everything about real estate. And you don't have to become an expert in every phase of the property investment process. when you're involved in syndications. You do if you're going to run it yourself, right? If you're going to go out and do due diligence on a deal and you're going to go find the single family or the duplex or the triplex or whatever, you're going to have to do the comps. You're going to find out what the tenant rents are. You're going to have to figure all this stuff out. You have to become an expert in that if you're going to operate it. You don't have to if you're going to be in a syndication. You're investing with experienced sponsors. You can diversify into different markets, into different even asset classes, right? We own some stuff in self-storage. We own some multifamily. We like those asset classes for a bunch of different reasons. But as a passive investor, you get to really pick and choose your asset class, your geography, how many units you like, does it have a pool that speaks to you? I don't know, whatever the choices are, right? That you get to make, and then you can quickly and easily scale your portfolio while mitigating risk. So opportunity for diversification. Number 3, this is the one. This is what pushed us, and I mean violently, into multifamily investing is tax benefits. So just like personally owned rentals, you get the pass-through tax benefits when you invest in real estate syndications. Now, you don't get those if you invest in a real estate investment trust. What that means is you put $100,000 into a REIT, they will pay you returns, but you own a piece of a company. You don't own a piece of a particular asset, which means those tax benefits do not flow back to you. Ask your tax advisor. He won't tell you. He won't tell you I'm lying to you. And then the syndication acts just like a single family, so that the tax benefits flow back to your personal returns, which means you're going to be getting quarterly payouts, which means you're going to be getting really tax advantaged income because you'll be able to write most of those quarterly payments off just with straight line depreciation, just like your mortgage interest for your house. We get to offset the mortgage interest on these bigger properties too. So, making tax-free passive income is the goal. That's why we got into it. So you will likely owe taxes on the appreciation. So when you get paid out, right, you'll have depreciation recapture. But talk to your CPA about your personal tax situation, because even that, if you're trading active income for, a capital gain type depreciation recapture income, you're arbitraging that tax difference in your pocket. So if you get taxed at 35%, you invest in one of these deals, and at the end you get taxed at 15%, you've just saved yourself 20% of your money, right? And that adds up over time. So the tax benefits, we're going to do a whole podcast on this, but number 4 is limited liability. So when you invest in these real estate syndications, your liability is the amount of your investment. If you were to invest 50 grand, your biggest risk is losing that 50 grand. You wouldn't be on the hook for the entire property, right? We're buying a $42 million property right now. We're putting $11.5 million in equity in, right? But the most liability is whatever your particular investment is, not if somebody trips and falls, not if somebody sues the property. You have multiple layers of LLCs protecting your liability in the property. So it insulates you from risk is the point, right? Which is what we really like to have. And then positive impact. With your own personal investments, you make a difference in a 2-family or maybe a 4-family's lives. With these syndications, we're going to have 384 units on our next deal, right? We have thousands of units across the country. So you are really impacting thousands of families across the country. And hundreds of families in just one particular deal that you do. And then also with the positive impact, what else we do is, we invest with purpose, meaning we carve out a piece of the deal for a nonprofit in every single deal. So it's just, it's a cleaner, safer, nicer place for you to put your money in terms of you're not getting that from stocks. You're not getting that from a mutual fund. So if you're on the fence between active and passive investments, the experience that you gain from owning small rentals is irreplaceable, right? We've had some smaller deals that we've done and we got a lot of experience doing it. But it's not necessarily something that you have to do. You don't have to personally own rental properties. It's not a prerequisite to owning commercial. You can go right in and get similar return profiles, by the way, and just be a passive investor. We're always looking to invest in real estate as a way to, it's all of our portfolio, but you should be diversifying at least a portion of your portfolio and mitigating risk through these types of transactions. It gives you an opportunity to have a positive impact on the families of the communities of where people are living, and a positive impact on the environment and the community around the properties that you own. So I hope that that gives you just the tops of the waves of 5 reasons you're going to love investing in passive real estate syndications. I mean, we always talk about mailbox money, right? Everybody wants that mailbox money. Well, this is the easiest way that I have found to get it. And I like the fact that I could still drive by the building and see what we're invested in. And you can't do that through Wall Street. So thanks for tuning in to the Free from Wall Street show. If you haven't done so already, go sign up for our investor club at integrityhg.com. It's the only way you're going to be able to see our deals, learn about the nonprofits that we are working with, see how we're impacting communities around the world through passive real estate investing. Talk to you guys soon. We will see you next time.